welcome to this explainer. Today, we are diving into a really fascinating systematic review of 16 different articles to unpack how a totally unique Islamic financial institution is taking on global poverty and economic development. We're looking at a deeply rooted cultural tradition that has been completely reimagined for the modern financial world, and honestly, the data we have on its real-world impact is pretty incredible. Right off the bat, let's start with a massive number: 1.7 billion. That is how many adults globally still do not have access to basic financial services. We're talking millions of people effectively trapped in extreme poverty, just unable to safely save money, borrow, or build businesses. And as the research clearly points out, a disproportionately huge number of these financially excluded folks live in Muslim-majority countries. So this staggering reality brings up a pretty critical question. How do we actually solve financial exclusion when our traditional development finance models are, quite literally, falling short? We have seen decades of conventional poverty reduction efforts, yet this massive gap is still there. It tells us there's a desperate need to innovate culturally appropriate solutions to bridge this divide, especially since the old models just aren't reaching everyone. To answer that, here's our roadmap for this explainer. First, the global financial gap. Second, enter the Waqf Bank. Third, 4 operational models. Fourth, driving socio-economic impact. And fifth, challenges and future frontiers. Let's get into it.
Starting off with Section 1, the global financial gap, and why it's a true crisis of access.
For a huge segment of the unbanked population, conventional banking isn't just hard to access, it actually contradicts their cultural and religious values. Specifically, Islamic finance has a heavy focus on social solidarity and a strict prohibition of interest, or riba. So without an alternative that actually respects these principles, true financial inclusion is basically impossible.
Which brings us to Section 2. Enter the Waqf Bank, where charity meets microfinance.
Before we talk about the banks themselves, we gotta understand the root concept. Think of a waqf kind of like a university endowment or a trust fund. Historically, this meant donating fixed assets, like land or a building, for religious or charitable purposes. The principal asset remains untouched forever, but the returns and profits, those are channeled strictly into public goods, like education, healthcare, and social welfare. It's an ancient system for sustainable, long-term charity. But here is the real game changer: the evolution from donating fixed, illiquid stuff to what is known as cash waqf. Cash waqf allows these institutions to mobilize monetary donations as their primary source of capital. This gives them incredible flexibility, allowing them to function just like modern microfinance institutions, all while keeping that perpetual, charitable mandate intact. And this isn't just a centuries-old idea sitting in the past. Over the last decade, research on Waqf banks has rapidly evolved. Back between 2013 and 2015, we were just looking at early conceptualizations. That shifted into theoretical models and then real-world pilot implementations by 2018. Today, we are finally in a phase of rigorous empirical impact studies, meaning we actually have the hard evidence on how well this works. Moving on to Section 3, 4 operational models, or how this actually works in the real world. Researchers have identified 4 super versatile approaches to this. First up is the integrated Islamic bank model, like the Islamic Bank over in Bangladesh. They basically weave cash waqf right into existing banking infrastructure for massive scalability. Second is the micro-Waqf bank model, which is huge in Indonesia and focuses deeply on grassroots microfinance for rural communities. Third is a specialized education financing model, using waqf to provide fair student loans. And fourth, a hybrid crowdfunding waqf model that leverages digital platforms to pool global resources for specific social projects.
Now for the best part, Section 4, driving socio-economic impact. Let's look at the data.
The studies show these banks are making serious dents across 4 main pillars: poverty alleviation, financial inclusion, MSME, that's micro, small, and medium enterprise development, and education financing. Let's break down the exact numbers, because they are pretty eye-opening. Let's talk hard numbers on poverty. Empirical studies show a 15% increase in household income among beneficiaries of micro-Waqf banks in Indonesia. And what's wild is this growth was measured over just a 2-year period. That is a highly tangible, rapid improvement in day-to-day economic conditions for families that really need it. When it comes to financial inclusion, the stats are just as impressive. Within their operational areas, these institutions successfully reached an incredible 78% of previously unbanked individuals. They are successfully penetrating rural, marginalized communities where your standard commercial banking services literally do not exist. And what about small businesses? For those micro, small, and medium enterprises, the impact of getting access to this capital is immediate. Researchers observed a massive 30% average increase in business revenue within the very first year of working with Waqf Banks. This goes way beyond individual wealth. We're talking local job creation and serious economic development.
Now, this next one is still largely theoretical at this stage of the research, but it's super exciting. Implementing a specialized, Waqf-based education financing model is projected to reduce student loan burdens by up to 40% compared to conventional loans. Just imagine the long-term impact on human capital if students aren't crippled by interest-bearing debt right out of school.
All right, Section 5, Challenges and Future Frontiers. Time for a quick reality check. As inspiring as those numbers are, it's not all smooth sailing. These institutions face some pretty major roadblocks. First, a total lack of comprehensive legal regulations. Many jurisdictions just don't know how to legally classify a bank that is also a perpetual charity. Second, there's a really low level of public understanding about the concept, which holds back participation. And third, it's a tricky balancing act. They have to maintain the tough operational efficiency of a modern bank while strictly sticking to their charitable goals without drifting into pure commercialism.
So how do they overcome this and actually scale globally? Well, the research lays out a few clear next steps. Step 1, deeply integrate financial technology, or fintech, to make collecting and distributing funds way more efficient. Step 2, create international cross-border Waqf networks to pull resources on a global scale. And Step 3, we have to standardize how we measure social outcomes so that policymakers everywhere have consistent data to work with.
Which leaves us with a pretty provocative thought to wrap up this explainer. As digital platforms make global connectivity easier than it's ever been, could the ancient charitable principles of Waqf, supercharged by modern fintech, be the exact innovation we need to finally close the global wealth gap? It is a truly powerful framework that blends the best of social welfare with financial sustainability, and the data absolutely shows it's a space worth watching closely.